So before you're investing into something, say you're looking at a company, random example, um, before you even start looking and thinking about this company, you need to look at yourself first. So you've probably heard the saying, always put on your own oxygen mask before helping someone else. It's a similar thing here. Before I'm saying I'm going to put all of this money into something else, I need to understand how much money I have and what my situation is. So investment is something that sometimes you can get your money out from easily, other times it's harder. So especially when you're thinking about locking your money into something, I would really recommend you look at how much money am I going to need and when am I going to need it. For example, if I've got a whole load of debt, for example, a credit card that I'm paying off, I'd be looking at how much interest I'm having to pay on the credit card versus my potential returns from the investment. And P.S. Often you'll find paying down debt is going to give you a much better return than most investments out there. Not always, but quite often. And then, so jumping back to the situation there, I'd have to think very carefully if I've got a whole lot of debt before I'd invest in anything. The typical sort of advice people would give is really consider paying off that debt first. But, of course, it will depend on your individual circumstances. Another thing to consider too is, well, what about your savings? So if I don't have an emergency fund and yet I'm thinking about putting money into random companies or cryptocurrency, might be an idea to get an emergency fund first in case of a rainy day, because what happens if it's a rainy day and just so happened that Elon Musk or someone else makes a tweet and the cryptocurrencies took a dive that day? Sucks to be me is the short story. So breaking down your financial situation is really helpful here. And sometimes it could also be useful to talk to a budget advisor if you don't have a budget yet and you don't understand your own income and your own expenses. Um, I think don't just look at what your income and your expenses currently are, but what you think they're going to be, like are there any big events coming up? And think as well of the best case scenario and the worst case scenario. Often you can always add to an existing investment, send more money in, but sometimes it can be more difficult to take money out. So sometimes it might be worth investing a little bit less to begin with, and as you're more certain that you've got that money, adding to it as time goes by. Often investing a certain amount every month can be more powerful than just doing one lump sum investment. So always the first step, look at yourself before you want to put money into anything else. Second thing is you have to have a really clear goal. So if you're just investing because someone told you investing is a great idea, so you're going to invest, don't bother. Or rather than don't bother, it could still be worthwhile, but it's like deciding to get into a car, driving around with a blindfold on. I mean, you could go somewhere good. It could be useful, but would you want to put money on it? Because that's literally what you're doing when you're investing. You're betting your money. So if you've got a clear goal, it's going to be a lot easier for you to invest in an appropriate way for you to meet that goal. So say, for example, my goal is to buy a new house. I'm not going to be investing in the same assets compared to if my goal is to learn how to go and win on the cryptocurrencies market. I'm not going to be investing into the same assets compared to if my goal is to save for retirement. I'm not going to be investing into the same assets as if my goal is to save for a holiday I'm taking in 3 weeks. So there's a whole load of different goals that you can have out there, but the first thing to think about is your time horizon. Is it a long-term goal? Is it a short-term goal? When do I need the money? If you need the money soon, you need to be thinking about for the different investments. how long is it until I can access this money? Is there, for example, a time delay? How fast can I turn this asset into money? How volatile is the asset? If the value jumps up and down and up and down, and it so happens to be down, you probably don't want to be selling it. So if you're wanting to be getting that money out soon, maybe it's not such a good choice after all. So the time horizon is always very important. The second thing to think about as well is, well, it's that risk, it's that volatility. So when here we're talking about risk tolerance, take for example me. If I was to look at an investment today, and then tomorrow I see that the value has dropped by 50%. Different people have got different attitudes. I might be going, oh my God, I am so stressed. It's gone down by 50%. And then I'm checking on it every 30 minutes. Yeah, that sort of personality, totally understandable. I know many people like that. But a really risky investment is going to create so much anxiety, so much stress, takes so much of your time. Is it really worth it? Yes, financially, it might be the best choice, but you've got to look at your own emotional well-being, your own time from having to wanting to check up on it all the time. All of those are also really relevant. So in comparison, some people get a thrill. Some people look at it and go, whoa, value's just got down today. It's going to go up again tomorrow. Is it going to quadruple tomorrow? Some people get a kick out of it. They really enjoy it. So again, for those people, they've got a different thing other than just earning money that's relevant to them. So yeah, risk tolerance is important, not just for the time frame of when you want to use the money, but also your own emotional well-being. So those are really important things to think about. Setting those goals, making them really clear, being very clear when you want to use the money, how much money you want to use, and what your risk tolerance is.